Well, speaking of specifics, there is a robust T&D outlook and gradual margin recovery as guided by KEC International or spoken by KEC International, maybe to specific houses or otherwise. Vimal Kejriwal, Managing Director and CEO at KEC International, joins in to talk about the space and KEC's role within that. Mr. Kejriwal, great having you. Thanks so much for taking the time out, and I hope all is well. But it certainly seems like, Mr. Kejriwal, that all is well, because the outlook of the T&D pocket seems to be very, very constructive. Can you give us the broad brush about how do you think about FY25, but not just about FY25, for maybe the next 2 or 3 years?
Good morning, Niraj, and thanks for having me. I think I'm in this industry for the last 22 years, and I don't think we have seen such robust demand in the India T&D specifically. In fact, if you look at our order book, it has grown almost 3 times in 2 years, from almost, let's say, 3,000 crores to 10,000 crores from FY23 to today. And clearly, with the way the government is talking about how to meet the power demand and also the targets for renewable, at least for the next 3-4 years, we see this demand to continue in the same format.
Wow. Okay. The same format. Okay. So here, where is this? Where is this coming from? I would love to. I mean, we know that the space and the government targets for the overall power space are very, very tall. Do you reckon execution on the ground, Mr. Kejriwal, is happening at such a frantic pace to enable this kind of a demand? I mean, I saw numbers which said that your growth guidance of 40%. 40% on your base is not a small number.
So I don't know, 40% is what we have said is overall for the company, we said 15%.
Okay.
Transmission around 55-60% of our numbers. We did say almost a 50% growth in the India T&D numbers. So India T&D grew 50% last year, FY24 over FY23. And we are saying that FY25 will again be another 50% over FY24. That's the India T&D piece. The second piece we talked about where this demand is coming. I think there are 2 areas.
Mr. Kejriwal, let me just come in because I would love clarity here. But FM Nirmala Sitharaman is just taking charge as FM, so need to cut to that for a moment. But sorry, Mr. Kejriwal, had to cut you. So let me just tell you what one of the notes is saying. I would love for your clarity from there. They say that it's a Nomura note which says that they expect KEC's management has retained its FY25 order inflow revenue growth guidance of 40% and 15%. So order inflow guidance of 40% and revenue growth guidance of 15%. Is this on target?
Yeah, I think the percentages can be slightly here and there, but last year we did 18,000 crores of order intake, and this year we have talked about 25,000. So I think that's what they are talking about, a 40% growth on the order intake. And revenue, yes, from close to 20,000, we are talking about achieving 23,000. So that's a 15% growth. Yes.
Sir, I mean, are you being, are you looking to underpromise and overdeliver? The reason I ask you this is not just from the past track record, but also from the fact that if you're looking at a 7% real GDP growth, add inflation, so nominal GDP growth of 12%, the sector that you are in will probably grow much faster, and you being a leading company will probably grow even faster.
So, Niraj, as far as transmission is concerned, we are talking about higher growth numbers. But as I said, transmission is around 55-60% of our revenues. We have got civil, we have got railways, and there are other businesses. So I think that's where the growth is getting slightly moderated. That's why we're talking about overall 50. And I think last 2 years, we have seen issues happening on whether it's Red Sea, whether it's other issues. So I think we would be happy to be conservative and proven wrong later on. But I think that's where we are today.
Got it. Okay, this conversation, of course, has 2 important things. While Mr. Kejriwal is talking to us, FM Sitharaman, take charge, and this is important. This is really important. Mr. Kejriwal, sorry for that interruptions, but this is as important as it gets, and really, let's wonder if FM Sitharaman does give a sound bite or 2. It will be important to hear from her about how she thinks about the next 5-year term as well, and of course we'll watch out for that. So. And in some sense, I would love to understand from Mr. Kejriwal, while we are showing FM Sitaraman, of course, out here, but would love to hear from him. What does he make of this, this whole sign of policy continuity that we're seeing with FM Sitaraman is there? I'll just get to him in a moment, yeah, this is as important as it gets. Actually, if she starts speaking, maybe we'll cut to her. But Mr. Kejriwal, while we stay with this footage, we just love to understand from Mr. Kejriwal what he thinks of this policy continuity. Mr. Kejriwal?
So I think we are pretty happy with, obviously, with the finance minister and also with the power minister, the railway ministry, with Mr. Vaishnav continuing in the railway ministry. Power ministry, obviously, we have seen a change with Mr. R.K. Singh going out and Mr. Manohar Khattar taking over. So I think that we will keep on watching. Railway, we do expect that despite continuity, I think we are hoping that there's a change in the priorities of the railways. Because till now, the last couple of years, we were seeing the priorities more on, running more trains and sort of rebuilding stations, etc., and a little bit less focus on the infra build. I do hope that now, this year onwards, we'll start seeing a lot more infra build happening in the railway sector, which would be tracks and signaling. Today, Vande Bharat is running at 70, 80 kilometers instead of 140. So a lot of investment will have to be made, at the ground to ensure that we achieve the optimum, capacity, etc. So we do hope that at least on this part of railway, something happens. Power, I'm sure that there's no alternative. The way power demand is growing at 5-6%, and the government first continuing on renewables, there is need to expand the T&D network significantly. So I'm very sure that will continue.
Yeah, and I think that's an important point. While maybe one or two ministries have had some changes, but the larger focus very likely would probably continue. So I think that's the one thing to certainly watch out for. Okay, the optimism, the expectation that people have, Mr. Kejriwal, and maybe you guided to it as well, because you've aimed for EBITDA margins of 7.5% in FY25 versus 6.1. That's a reasonably sharp jump on that base. What leads to this? And is that a new normal? Or is it something that you pencil in for the year and the next year things might be different?
So Niraj, next year we have FY26, we are looking at a higher than 7.5. Okay, so we have talked about an exit EBITDA being close to 10% or double digit. That's the way we are looking at it. And if you look at the pre-COVID, we had touched 10.5. I think our margins went down in COVID because of certain specific events, which we can discuss. And last 6 quarters, we have been trying to improve the margin. So we touched a bottom of 4.6, and quarter on quarter, Q4, we were at 6.3. 6.1 was the average for the year. So we do expect that, we should be getting back closer to double digit maybe by the end of this year or maybe next year or so. That's where our targets are. And I think the reason for the optimism is very clear. The margins went down because of specific events of very sharp increase in commodity prices and because of the delayed execution due to the COVID impact, especially in countries like Brazil, etc. And so all of them are behind us, which is why we are, sort of optimist and reasonably optimist, saying that we should be able to achieve a turnaround in our margins.
So in effect, when analysts point out that, for various reasons, how in the FY21 to 24 period, you gave margin guidance in all earnestness, but couldn't quite meet. So you're saying that those specific factors are behind, and any kind of volatility in metal prices or supply chain constraints will probably not be such a dampener that it doesn't allow you to reach 10%. I know there is a fear of an unknown always, Mr. Kejriwal, but I'm just trying to understand. You are reasonably confident that you will hit 10% odd in FY26.
So, Niraj, black swan event, as we said, can happen anytime. But the supply chain constraints are largely factored in our growth of 15%. If we are able to overcome, if the supply increases, transformers are available, GIS or conductors and all that are available, hopefully we can do better. So as of now, we have factored in whatever are the constraints in the market, especially on the supply chain. And that's how we have given this guidance.
I get the drift. Okay. Which from a bottom line perspective, growth is fabulous, Mr. Kejriwal, because if you consistently clock in this 15 odd %, as you would, and if the margin picture improves significantly, that's quite strong. Okay, where are the risks, Mr. Kejriwal, to this? Because I heard you speak about how some proof of the pudding needs to come out on the railways again, because it's traversed away, but there is a lot more that needs to be done. So is it that you are confident about T&D, but the non-T&D areas are something that you would require to look at? Domestic versus international, what's your sense there? Could you take us through that landscape?
So if you look at the order book today, India is 75% and international is 25%, which is slightly different from normally it used to be 65-35 or maximum 70-30. It's 75-25, which itself is a proof of what is happening in the country. Especially obviously T&D, even civil we are doing very well. We have an order book of more than 10,000 crores. I think the only question mark in our entire portfolio right now is railways. But I think we are starting to see some changes. In fact, the orders which we announced earlier this week had almost 40% coming in from railways. So we do hope that railways can turn around, and that's one of the reasons why we are at 7.5%, not at 8 or 9, because of the lower margins what we are penciling in for the current orders which we have in railways. I think that's the only issue which I can see. Otherwise, I think on the metals and all that we are, I'll say, more than adequately hedged and all that. So I don't see any major surprise or threat to our projections.
How big can the railways piece become, Mr. Kejriwal? And what about incremental orders in railways? I heard you say that the current orders have this margin of 7.5. Can incremental orders have slightly different margin structure? And how confident are you on railways becoming larger than what it is right now? Because frankly, when I talk to everybody in the markets, the two pockets that seem to have the highest growth potential, amongst others, seem to be power and seem to be railways.
So the current order book does not have 7.5% margin, but the new ones definitely have more than that. Okay. So that's why I was looking at saying that if we keep on getting new orders, start executing those orders, the margins will be higher. See, when you look at railways, what is happening is most of the growth what we are seeing is coming more from the rolling stock side and not from the infrastructure side. So you can look at any of my competitors on the railway business and you can read the commentaries of all of them, especially on the EPC part of it. I think that there has been some significant changes which have happened from the clientele being changed from the railway PSUs into the railway divisions, the contracts going away from BOQ to EPC. So then, the focus on running more trains. So that has led to a significant delay in giving block work so that, we can actually work and do the projects in time, etc. So I do hope that the government is very clear on these issues. We have had meetings with the railway board. They are also aware. And we do hope that all that will change. And that is why we are looking back at the railways. As far as the size is concerned, I don't remember, but I think we did around 35, 3,600 2 years back. Last year, we did around 31. This year, we are penciling a degrowth. But hopefully, from next year onwards, we do expect the business to grow. If you ask me 3-4 years back, we are talking about railways going to 6,000 to 7,000 crores, which let's wait and watch what the railway minister says. But that is always possible. The other piece in railways is that we have started doing international. We just started execution of our first order in Bangladesh. We have bid for some other countries also. So slowly a part of the railway revenues will start coming from the international as it does from T&D.
Okay. One final question, and if you follow Mr. Kejriwal on Twitter, viewers, you will see June 5th, they won a large civil order as well. And apparently, analysts believe that civil will propel order inflows. Could you talk a bit about that segment, Mr. Kejriwal, before we wrap up?
So civil has been a mixed bag. Overall, we are very happy with it. But if you look at industrial to me is still a laggard. Hopefully, with the new government coming in, people will start firming and start investing. I'm talking about the private industry. Our biggest bet, which is paying off very well, has been on the residential side. I have never seen such boom happening on residential. And the order which you're talking about is the first order which we got in the NCR region. Otherwise, we were not there in NCR in the residential piece of it. So now we are doing very well. We are, I think, building around 65 or 70 towers today across the country and a lot more inquiries. I think residential is doing very well. And on the back of it, we are seeing commercial real estate coming up. Okay, so those are two areas. And third, I'll say is data center. So these are the 3 or 4 areas which we are seeing a lot of push happening on the civil side. Hopefully, with the new urban development minister and all that, maybe the metros may come back. But right now, they are slightly on the back seat. But let's see how it happens. But overall, I think we grew civil by more than 30% last year. And again, this year, we expect to grow it by more than 30%.
Got it. Mr. Kejriwal, we wish you all the best for achieving that margin guidance and probably eclipsing it as well. Thank you so much for coming in today and talking to us. Really appreciate your time.
Thank you for having me. Thank you. Bye.
That's KEC International. Robust view from brokerages on what they are expected to do, especially on the PAT front. The stock is flattish right now, but the Nomura target is at 960. They've increased from 598 to 960 on very modest margin assumptions, by the way. Keep that in mind. Okay. More around politics. TDP Chief Chandrababu